All right. Well, thank you, everyone. On behalf of Raymond and our construction niche practice, I'd like to thank you for tuning in to our Back to Building webinar. We've got two fantastic speakers today that are going to provide some insight for everyone for all of our contractor clients that are ramping back up and getting ready for the beginning of some type of normalcy, which starts this Friday. So good news that parts of our economy are starting to open up. It's great to see. So I'm going to do a little background on Susan West and Tom Shemanski. And Susan will actually be up first, but Susan leads our Human Resource Solutions group, working with many small and mid-sized businesses, providing expertise and guidance in the area of human resources, providing support which can be all-encompassing, including complete HR outsourcing to her and her team, as well as assisting with various needs, including personnel file management, payroll processing, help with your employee handbook, and much more. So prior to joining Raymond, Susan was CEO and founder of Quad West, which became part of Raymond, and we are extremely happy to have her as part of our Raymond family. Tom Shemanski leads our CFO Solutions group, and Tom provides support in that critical C-level spot for many of our clients, and assisting with a range of issues, helping with strategic initiatives and reviewing financial performance, setting up improved systems, access to capital markets, and a plethora of other things as well. I mean, Tom and his team are a critical part of anybody's operations. So just a little bit about Raymond. We were founded in 1941. We have about 130 principals, 900 associates strong throughout 3 states, and a number of offices. And prior to the COVID crisis, we were at 157 million. Those were our revenues in 2019. That puts us somewhere in the mid 30s, I think, in terms of size in the country with public accounting firms. And we are extremely excited to also have a top 50 construction accounting firm designation that was bestowed upon us in 2019. So without any further ado, I will turn it over to Susan West.
All right, thank you, Andrew. Well, hello, everybody. I'm delighted to be here. You're going to find that there's many slides. I'm going to flow through them pretty quickly, but I also wanted you to have them after the call because there's some great details in there that I think will help you navigate, the next few weeks, but also through the end of the year as the Families First continues. So I'd first like to talk about, there we go. We had the Families First Kronos Response Act, often referred to as FFCRA. That announcement created a lot of interest, concern, confusion about how it could be used. It ultimately ended up being very clearly for 2 main leaves: the Paid Sick Leave Act and the Emergency Family Medical Leave Act. Immediately following that, or shortly after that, we had the CARES Act, and that was more all around the Paycheck Protection Program and other loan options for employers to consider. What we found is early on, when the state orders came out around March 18th, March 24th, we had to start thinking about what the heck are we going to do with our employees. Some of us were shut down, so we were looking at all these options. Do we lay off? Do we furlough? Temporary leave of absence, terminations, remote workforce, and what about a work share program under unemployment? Once we there was a whole lot of conversation at that time to say, how do we lay people off? What kind of documentation do we need? And all of that became a bit, I want to say, confusing at the time with our, did the leaves apply under this state order? Well, we soon found that it didn't. And so we had to get more into what were the specifics of each. So we know that the Emergency Family Medical Leave Act is for 12 weeks of pay. You have to be with the firm for 30 calendar days. There is a 10-day exclusionary period up front. And there are some details around eligibility. Obviously, if you're over 500 employees, you aren't covered under this. But if you have less than 25, you can claim an exemption, and there's a process for doing so. We know this family medical leave emergency is for one qualifying reason only, where the traditional FMLA is for over 50 employees. You have to have a much longer period with the company before you're eligible. And so in this particular instance, it's only for when an employee is caring for an individual who's subject to a local quarantine or isolation order, or has been advised by, oh, that is not right. Oh my goodness, it's the first time I read it out loud. It has to do, sorry, this is more around childcare. So I'll make sure we get that corrected before we publish the slides. But it is only for those who have a childcare issue. And the childcare means that they're unavailable as a daycare provider, or the schools are closed. So your employee may not be able to work due to those reasons. There is a process, we're going to go over that to help qualify that individual. There is also payment of a maximum of $200 per day, or 2/3 of the employee's regular earnings. So again, more detail can be provided on that. It's all available in the DOL, but I definitely think this is coming into play more and more as we're asking employees to return to work, and we have to start substantiating whether or not they're qualified for this particular leave. The second one was all around paid sick leave, and this is the one that had 6 qualifying reasons, and those 6 qualifying reasons are listed here. This is where you have more of the health concerns that have to deal with either your own self-health, or that you're caring for somebody else, or that you have some symptoms and you're going to seek a medical diagnosis. It also has the number 5, which is the same as the Emergency Family Medical Leave Act, that the employee is caring for a son or daughter of such the employee if the school or place of work, place of care for that son and daughter has been closed. And we're experiencing now, obviously, a lot of this issue because the schools are, in fact, closed through the end of the year. And some of our child care providers, daycare centers, are not up to speed yet. They haven't reopened. With the Paid Sick Leave Act, it's for 80 hours. The very first day you're hired with an employer is the day that you're eligible to take paid sick leave. Again, it's for private employers with less than 500 employees, and those with less than 50 employees can also look for a qualifying exemption. I ask any employer that is looking for an exemption to really document the business reasons and have a brief review with your employment or legal counsel to make sure you meet the criteria and you have put the proper guidance in place. So in the Paid Sick Leave Act, there's a different level of qualifying. It is based on the reasoning. So for 1, 2, and 3 of the qualifying reasons, you're paid up to a maximum of $511 per day, or for a total of $5,110. For reasons 4, 5, and 6, you only have to pay up to 2/3 of the wages, not to exceed $200 per day, for a total of $2,000. There is definition of what the regular rate is, and certainly for those employees that don't work a regular 40-hour work week or are on a salaried basis, then there is a computation you should be aware of to really understand what that regular rate is for that individual. And as a minimum, it will always default to the minimum wage. Now, under the CARES Act, which is the second major legislation that came out, they offered the three areas of the unemployment program that the federal government said that the states had the opportunity to employ and that they would be the ones monitoring it. So the first one was the one that's probably causing a lot of employers a lot of angst, is that if you get you have the opportunity to get the extra $600, a flat $600 a week in benefits. The second was an extension of the unemployment benefits up to an additional 13 weeks. So most states had already moved it from 20 weeks to 26, and now the federal government added another 13. And then we have the third item, which is that those employees who typically would not be eligible for unemployment, they are considered like a totally new class of employees from an unemployment agency point of view, is those called the independent contractors, gig workers, self-employed. And it took a while for us, I'd say the states, to get that particular class of employees set up on the system so that they could actually apply. So what we have is this sort of timeline that shows where the families first came into play. It was passed on March 18th, but it really wasn't effective until April 1st, and then it goes all the way through December 31st. There was a non-enforcement period for the first 30 days. We've passed that. I want you all to be aware that the DOL has already been fining employers who have not utilized the leaves in the proper manner and offered it to employees when eligible. And so we need to be prepared as we're bringing our employees back to make sure we know what to do and we are paying them where it's appropriate. And then you can see how the unemployment factored in. That became available around April 6th. And so you have all these overlapping activities, along with, of course, the Paycheck Protection Program, which for a lot of employers are just receiving their funds, and now that 8 weeks kicks in. What was interesting about unemployment is they expanded the reasons for unemployment to a full 10. We were already aware with some of the ones like 1 through 6. 7 through 10 were more interesting and new. So unable to work, scheduled to start a job but are unable to do so as a result of the COVID-19. So many employers were withdrawing offers that had already been made. There may be an instance where a major support for a household because the breadwinner in the household has died as a direct result of COVID. They're quitting their job as a direct result of COVID, another one that's creating some confusion. And then the last one, the individual's place of employment is closed as a direct result of COVID-19 as a public health emergency. What we all need to remember, and I think this is part of what gets confusing, is the state actually qualifies each individual who applies. So even though we as an employer may not agree with their decision, the state ultimately makes the final decision. What we do know is there's some conflicting discussion around, well, if an employee quits, how is that a good reason for them to obtain benefits when we actually had work for them to do? So that was one area, right? We have this idea that they're afraid to return to work, which I'll speak to in a moment. But let's just say they outright quit, but they're still eligible for benefits. It's conflicting. The state has also said that employees can self-certify. So what I believe we need to be doing when we have employees that are making these kinds of decisions, that we do educate them to recognize that if they choose not to accept the work we're offering, they're making a decision that could ultimately create a loss of benefits. And if they're self-certifying and not reporting any sort of reduced pay and they're not claiming it, they could move into a fraudulent situation and then actually have to move back to paying those funds. So even though this looks like a blanket offering, and right now the whole outlook or perspective is all based on protecting the employee, I think there'll be some situations where employees might be surprised if they haven't been following the guidelines or doing their homework. So what we also know is that if you're eligible for $1 under the weekly benefit amount, you're also eligible for the full 600. And vice versa. If you're not eligible for a weekly benefit amount, you get 0 in a particular week, then you will get 0 in the federal benefit, so no 600. When employers are under a reduced schedule, so sometimes we have employers who are paying employees for less hours than normal, there is a calculation. It's actually called Fact Sheet 140 under the Michigan UIA that would actually identify what is the value an employee would be paid that would create a 0 weekly benefit because they made too much, or what would they be paid if they are making under what the maximum in Michigan is of 362. So it's very clear what that calculation is, and certainly anybody can take a look and figure out what an employee would be owed if you actually reduce some pay, or they're not, or they're earning over. Will I get any weekly benefit amount, or am I making too much? I think this quote is pretty important. We want workers to work, not to become dependent on the unemployment system. Unemployment is not the preferred outcome when government stay-at-home orders force temporary businesses to shut down. And so this is the labor secretary who was talking with a small business administration or writing. And I think we recognize that employees are in situations where they are hurting, but we need to recognize that there are structures in place and we have to be understanding what those are. And it's not just a given that all employees should get unemployment for every single reason. Within each state, I just bring this up because different states, if you have employees in other states, are requiring different details for the employers to handle. So for example, Georgia is requiring employers to actually file for the unemployment benefits on behalf of a result of COVID-19. So Michigan employers can do that, but it's not a requirement. Where in Georgia, if you have an employee who you've laid off due to a COVID-19 reason, then you actually are the one who has to make that application for the employee. Okay, so now the Paycheck Protection Program is in play, or we're getting return to work orders. You know, how do we handle this situation? What are the new decisions that need to be made? I know certainly your folks are right in this scenario as we speak, and it actually Executive Order 2020-70 started to unveil what some of the requirements are for you folks in the construction industry. And so this is going to be an ongoing, I don't know, is she on like 75 or something? I'm not sure what her executive orders are, but I know that they're coming out often. So it's very important you sort of keep updated on what those are and how they might be impacting your business. This is probably the area where I'll spend a little bit more time. These are the 7 areas that I think as an employer you need to be ready for. And the very first one is just, do you have a preparedness plan? a crisis management plan is sometimes referred to, but all related to COVID-19. Do you have your compliance notices up? Are they where employees can see them around the Families First Act? Have you been looking at and understanding what not only the state orders are, but what are the county orders are, as it sort of relates back to this preparedness plan? So for example, for you folks right now, as you probably know, you must designate a site supervisor to enforce COVID-19 control strategies. You must be conducting daily health screens for your workers, creating dedicated entry points. So you have a list of, I see here, 5 things that you should be aware of. And so here and here, how do you start to integrate that? Hopefully, or you may already have provided return to work notices, and so I have some info on that. Are there any telework or flexible work arrangements? How do you handle the leave requests that might be coming in? How might you look at any compensation or benefit reinstatement or adjustments that may be necessary? And then lastly, how do you keep that communication open, recognizing we want to keep employees engaged? Obviously, they're critical to our revenues, and we want to make sure that we're getting their points of view. We're understanding how this is impacting them, and what can we do as an employer to keep them healthy and safe and working. So these are what I would call some of the 6 main areas of putting together a COVID preparedness response plan. So what about social distancing and implementing that and training? Screening protocols. What is the daily screening? What kinds of things are you going to screen for? Do you have a daily checklist that you're asking each employee? So you're asking similar questions of every employee. Things like, have you or anyone in your home recently developed any of the following symptoms? New cough, shortness of breath, or breathing difficulties? Have you had any 2 of these symptoms? A fever over 100.4, chills, repeated shaking with chills, muscle pain. And so you've gone through and you actually ask and handle this daily screening tool. Our recommendation is that you complete it, you hold it, and then you actually put it in a record, a confidential record. Are you providing personal protective equipment? What are you providing? How often? What about cleaning and disinfecting protocols? All of these things are going to give your employees the confidence that you're making those extra efforts, and you're following any CDC, state, federal, local guidelines. And then lastly, as you have employees who are indicating that they've either come in contact, tested positive, or are asking for one of the leaves, how are you going to report that? And then as vaccines come available, what's the process for handling that? So quite a bit in this section alone. That means employers need to put some energy around and making sure that your back to work checklist is pretty thorough. The next thing we talked about was model notices and getting those posted. You obviously need to do the employee rights one. There is a very complete frequently asked questions, so that the DOL is provided that give you all the guidelines about where to post. And certainly my other request is that you make sure your normal labor law posters are up to date, that you also have the Paid Michigan Leave Act poster up, that you have already, that it went into play over a year ago. But all these notices, it's been interesting, are getting a lot more attention by employees. And so I want to make sure that it's such a simple thing that you're basically dotting the I on this one without any problem. We already talked about complying with local and state orders. It's because we're in a situation right now where there's so many You know, it's just how do you have somebody maybe that's dedicated to helping you stay up to speed on this. The return to work notices. So this is probably an area where we want to be very much aware of. I hope you when you laid somebody off that you actually gave them a written notice. It's the same here. By documenting that you have a request for an employee to return, one of the very first things I would definitely be addressing is, what are you doing to provide a healthy workplace? So what actions have you taken? What can they expect when they return to work? And then what training are you going to give them upon their return? This is really going to be important for us to help alleviate, improve that we were communicating to employees when we have that one employee who says, I'm fearful about returning to the workplace. I do not think you are doing a good job. Well, as an employer, we definitely want to demonstrate that we have the plans in place, the actions in place, and that we're staying up to date. Definitely defining the return to work date, the schedule, talking or updating anything around attendance. If there's any opportunity for hazard pay, some are calling it hero pay. How does return to work and any absences come into play? Are you reinstating vacation if you put it on hold while they were on layoff? All those details regarding policies. There's it's interesting because one of the things that we're seeing a lot of discussion on is what happens if you don't return to work. I've seen many memos that have gone out or are in draft format that talk about if you do not return, well, first of all, a request to notify us as the employer that you've received the notice and what your intention is. If your intention is to return, great. We're looking forward to you coming back. However, if an employee indicates and does not return a receipt or confirmation, I'd be cautious to automatically terminate. I've seen many letters that have indicated, if we do not hear from you and you do not show up, we are going to consider this job abandonment and consider you voluntarily quitting. In today's time, when there are so many reasons for why an employee may be choosing not to return to work, if it's a COVID-related reason and we haven't gotten into a dialogue with an employee around that, we're already setting ourselves up for potential risk. We have to take the responsibility to ask the employee some specific questions around why they're not returning. Help if it's a fearful scenario, how do we address that by saying all the measures we're putting in place? If it's that they're caring for somebody else or been exposed, well, then there's a whole process around that, from not only the paid sick leave, but the Family Medical Leave Emergency Act if it's a child care issue. And so helping the employees understand that and documenting that will help us make sure we're doing our part to be compliant. So I absolutely do not recommend that we put an automatic termination statement in there. If you do choose to, you need to make sure you're referencing any employee handbook policies, just to make sure you're protecting yourself. The other thing we want to make sure you include in there is the fact that if somebody is not feeling well, what happens if they're at work and all of a sudden they're exposed? What do they do? And the last is, if there's any questions, who do they contact, right? If you have an EAP program or you have other benefits that are available to the employee, how do you make sure that you're letting them know about those? Now, many of those things you can include in the letter. I highly recommend you make your letter comprehensive enough to waylay some employees' concerns and really be clear about the expectations you are expecting on day one. So here's the big question. Will my employees come back to work? You know, I've already spent a little bit of time on the fearful employees. I think by you doing your due diligence up front and indicating all the safety precautions you're taking, now all the reasons for them being fearful in the workplace have started to be taken away, and you can demonstrate you've done your best effort around that. If then it moves into a conversation about stress or anxiety, now we're moving into an ADA and a possible accommodation for that. But that takes us into another path of, getting some medical diagnosis. And then we have the employees who we've already experienced who really understand the law, are asking then, well, if I'm not eligible for a family first leave, then why am I not eligible under the Michigan Paid Medical Leave Act? And so being prepared to address that with, well, we've already incorporated that in our general vacation policy. It's just being educated enough, because we're finding we have many employees who are savvy enough who are also indicating that they've been exposed, so I need 14 days, I was in close contact, I need an additional 14 days. And I think we need to be prepared with what are our process and procedures around those kinds of calls, how are we going to address those issues. So when we have an employee who's scared to come back to work, or we have an employee who really wants to understand whether they're eligible for one of their leaves, we can answer, we can handle those questions. Employees do have legal rights, probably more so than ever before in this pandemic times. And so, again, I want to make sure that we are aware and at least briefed on what things we should be putting in place to address their concerns. So one of the main things that I think helps protect an employer is, what is your policy around these leave programs? Do you have a specific form? We've actually created 2 very specific forms that we want our clients to walk through and ask. It actually has places where you talk about intermittent leave, you talk about, whose child are you caring for, what are their ages, you're having the employee attest that there is no other suitable person that's available to take to care for my child. So there's lots of things that become your documentation for the tax credits, but also prove that you were in an interactive dialogue with that employee. These are on there for your review, really definitions around what does full-time mean, what's the definition of a child. Interesting, we had to provide this kind of clarity by the DOL. And what happens job restoration ways under both of the acts. So as an employer, how do you become familiar with all of this? Here's some about the documentation on what's required. So again, some of these forms help you gather that. And this is all the documentation that will support an IRS review of those of you that obviously want to take advantage of the tax credit. You do have 100% refundable payroll tax credit for the wages of the people who take the leave. You probably already know that anybody on leave now is not eligible. Their payroll wouldn't be applied against the forgiveness for the loan, because you're getting the tax credit in another way, and therefore that would be considered double dipping. You would, however, have the opportunity to hit the full-time equivalent milestone for the forgiveness, but just not include these dollars in the dollar equivalent. And I think Tom will tell me if I'm wrong there. A little bit more about the different credits here and how they're captured. So the next thing is really, if you've had people on layoff, where are they on their benefits, medical benefits? Will you be bringing them back before they hit a qualifying event from a COBRA notice? Many people are looking at these things called the hazard pay or hero pay. What happens, are you considering doing some sort of bonus, an incentive bonus or a go-getter bonus? I've heard lots of terms around that. Or are you still in a situation, or may have to be considering a situation after the 8 weeks, what's going to happen? And will we be back to some layoffs, or is our business ramping up enough? So lots of questions around comp and benefits that we should look at. And lastly, just a reminder that keep that communication going. Our employees want to understand their responsibilities under the in this situation. They want to give opinions. So how do you keep that communication going? How do you make sure that you're engaging with them, rewarding them as you typically would for a job well done? Yeah, there's a lot to cover right now as an employer. And so we're here to help. Obviously, if there's more questions you have, we'll be happy to, I'll be happy to take them.
Thanks, Susan. I don't see any questions on the Q&A panel.
Perfect.
That doesn't mean that we won't have any at the end, but I'm not seeing any right now. So, Tom, do you want to talk cash flow management?
Sure.
Thank you,
Thanks,
Susan.
Susan. That was a great, a lot of information there on the HR side. Obviously, we're seeing just two big areas of requests for support, from our clients. One has been on the HR and this whole return to work and how do we do this properly, and the other has been on the financial side with the PPP loan program, supporting that, and also understanding, how that fits into a broader cash management approach and some tools, that you can be using to help not only manage the 8-week coverage period when you get your PPP loan, but also, understand where you are coming out of that, and then as you get into July, August, September, making sure you've got some tools as well. So let's see if I can figure out how to advance the screen. There we go. So a lot of you might be familiar with the term of 13-week cash flow model. It's kind of a banking industry type standard term that it's if you don't have something that you're forecasting your cash in a longer time horizon, especially with everything that's going on in the world today, you really don't have the visibility to make the right kind of decisions from a cash management standpoint. So, a traditional 13-week cash flow model is, it's really focused on a longer term outlook. Again, this is generally a rolling weekly forecast. So while the term is 13 weeks, a lot of clients run this out through the end of the year. And again, it is cash based. So it's not really a replication of your income statements. We're really trying to look at your cash expenditures and receipts and really understand the timing of those things and plan things out accordingly. So it's really good planning tool to use to look at all your current AR and look at all your sales pipeline and just put together an estimate of how this is all going to unfold, with your best estimate. Because a lot of times where we see stresses of cash is ramp ups or declines in revenue levels and project levels, and I'm sure a lot of on the contracting side or construction side, a lot of you are faced with that right now as you're bringing back a lot of employees and you're getting into projects with various different billing milestones, and so having some type of tool that's focused on your large dollar receipts and expenditures to try to map out what your business cycle looks like. Let you know how your cash or your line of credit availability are going to support those things. So the other thing that's really good as an organization is that it really engages your entire team. So the days of just your accounting person effectively trying to say, well, here's where cash is, that might be the accountant just traditionally can do a balance sheet approach for cash management. But a balance sheet is a one-day snapshot in time, so it really doesn't address the highs and lows on a weekly basis of really where your working capital is. So it's really important to get your finance team to be engaging with your sales folks, with your project scheduling folks to understand milestones, understand when we need to bring supplies in for certain projects, and really kind of structure out this cash timing cycle so you can really understand where your cash and your line of credits will support you during various business changes. And it also kind of provides focus. It really highlights your key milestones, and if you've got a large payment that's going to be triggered on hitting a milestone, then it kind of rallies your organization around, boy, we better make sure we hit that milestone, because look what happens if we push this cash receipt out 2 weeks. Look what it does to cash flow, or we're going to have to draw on our line if we don't get this payment in. So that's the type of tool that you're looking to have to actively manage your business. And and I kind of talked about this slide already a little bit. It's almost it's a tool that you build out to give you this time horizon look that kind of breaks your cost into categories. So a lot of you that are project, you already have project budgets, you already have kind of project breakdowns. So what we're looking to do is take that information and build it into a cash flow estimate. So, we know when all the material needs to be on the site and when we need to get that on order and when we need to pay. So it's really working with our project managers and making sure we're pulling those large dollar expenditures into the right weekly buckets, so we can be sure that the available cash is in the account and we can bring those things in as they're planned. And same thing with labor. If your labor has a tendency to flex up and down depending on what aspect of the project is, whether it's finishing projects or the demo on the front end. A lot of projects have different aspects that are more labor intensive, and so understanding how your payroll is going to flex and what the impact on cash is pretty important. So again, it's a great tool to have in your portfolio, and especially now with PPP. And I'll spend a second talking about that, because I know a lot of companies have gotten their loans in and now they're moving into the tracking. So just a couple of high-level tidbits on that is that if you've got your loan in, the SBA has already come out and said they're going to be auditing or reviewing any loan over $2 million. So it's going to be important that you have good tracking of your use of proceeds. So a lot of clients are either setting up a separate checking account, putting the funds in there, or setting up a separate general ledger account in their accounting system. And then each week they're kind of calculating or reviewing what their qualified PPP loan expenses are, and then transferring those funds into your operating account to pay for those each week. So what it does is it gives you a nice rundown of the balance of the account and all the supporting source documents that you used. And because there's a couple things that you have to closely monitor. One is the use of proceeds have to be 75% payroll defined, which includes employer portion of healthcare and retirement and SUTA taxes, and the other 25% on the non-payroll costs, which are defined as kind of rent, utilities, mortgage interest, or other real property interest type payments. So you got to be sure you're spending the money in that split. And then this kind of tracking mechanism will get you your kind of gross forgiveness or gross amount that you spent. But then there's a number of tests that you need to do at the end of the 8-week period to see, well, how much is this forgiven? Because there's kind of a misconception, I think, with some folks that, well, if I spend this all on payroll, it'll all be forgiven. And that's unfortunately not as clear as the reality. So the reality is that there's 3 levels of testing that offsets forgiveness and steps down that forgiveness. So it's important that you understand, that you can't, amounts over $100,000 pro rata for people won't be forgiven. There's a full-time equivalent test, and if your head count goes down, there's a straight line percentage reduction on your forgiveness. And there's also an excess of 25% wage reduction as compared to the first quarter. We're waiting for further guidance on the SBA on some of the definitions in these tests and how these tests work together in some ways. But at a high level, just understand that there's three levels of offset. So it's important early on here over the next couple of weeks that you project out what your 8-week spend is, and you run them through these various tests to understand what your true level of forgiveness is, because it's not as simple as, hey, I spend it and it's going to be forgiven if it's on payroll. So there's some other variables there that you have to take into consideration, and it all feeds back into this 13-week cash flow, because if it's not forgiven, then it converts into a 1% loan, 6 months deferral, and then with an 18-month repayment. So again, as you kind of map this out, I think for a lot of people, the key thing is, how does this PPP loan help me in the next 8 weeks? But probably more importantly than what does July, August, and September really look like, and how am I going to manage my cash and hopefully the benefit of the PPP to maximize my cash through this longer time period to help my business. So I think that's all I got, Andy.
Hey, Tom, just today I've gotten a couple questions on the, the Treasury came out with the caution first for publicly traded companies with access to all types of capital markets. And, after that, they came out with something a little bit more targeted to the everyday traditional businesses. So anybody that that's out there with concern right now that took a PPP loan, I know you touched again a little bit on it, but thoughts in terms of what they should be documenting and putting together, if they're over that $2 million mark, and there's that audit that's going to be looming out there at some point.
Sure, and I think it's one of those situations where at the time you made the application, you had some assumptions or some baseline of why you felt, the PPP loan was necessary. And, there's a couple different, areas you can look at. You can look at your sales pipeline, you can look at your activity and how that it was starting to slow. You can look at collectability of receivables, but it's a good idea to sort of collect your thoughts and put together your rationale. Maybe it was that, hey, I do a lot of work in this industry, and this industry, it's going to be significantly impacted. So, I kind of predicted that we were going to see a pretty significant revenue decline or some type of revenue decline during the 8-week period that could have forced me to maybe lay some folks off that I wouldn't have with the PPP loan. So I think it's just documenting some of those original assumptions or concerns that you had, and just having those together so that, if someone does come in, and you can kind of talk them through kind of state of mind when you're filling the application out, and some rationale or supporting data that says that, hey, this is, our incoming call into sales dropped 50% the last, the middle 2 weeks of March. And so, from that standpoint, we're like, that's a pretty clear indicator that revenues are going to start to trend down. So, so it's those types of things that I think really help outline your case and support, why at that point you felt it was necessary to submit the application.
Got a question that came in here, Tom. Can anticipated economic uncertainty be experienced later in the year, which will support getting the PPP now?
That's a pretty common question that, unfortunately, we don't have any guidance to that specific question. It kind of falls under that, well, I'm sure we're going to suffer at some point. I probably wouldn't, I wouldn't base my whole explanation on an overarching, yep, this is going to have a negative impact on the U.S. and it's going to have a negative impact on me. So I think anything you can do to get more specific to how it was going to impact you, or at least how you felt it was going to impact you, I think you want to go down that path, because it gets a little harder to, I wouldn't go into the meeting with, well, it was going to impact the country, so it was going to impact me, and that's why I did it without anything further than that. So I'd probably work a little bit more to get some more documentation, rationale, source data that kind of support, how exactly was it going to impact you or the industries you serve.
Thanks, Tom. Question here for Susan. I think you touched on this maybe a little bit, but what would you suggest to an employer? They're trying to bring them back to the job site, and they're just unwilling to return for fear of maybe the protocols are not they don't feel that they're up to snuff, or that there's still too much uncertainty out there with contracting COVID-19. I mean, what would you suggest to those employers?
Yeah, in that particular case, I would definitely have a conversation with the employee to identify what's been done, not only by yourself, but the work site, if it's where your client is and what they're doing. But beyond that, if they're still not willing to return to work, you need to let them know that you do have return to work opportunities and they're declining. So now I would ask, what is your vacation policy or PTO policy? And ask them to consider, or not consider, but to utilize that. And that, because right now in the state of Michigan, you can't discipline, discharge, or retaliate against somebody who has a COVID-19 reason, you would basically leave them on a personal leave. And again, that's why, what does your handbook say? How do you manage this in these, if you don't currently have one of those policies? But you have your vacation or PTO policy, then you have a unpaid absence, unpaid time off, and I would consider that an authorized leave right now. And then once it's lifted, the state order is lifted, and you've documented your conversations with these employees, now I would make another decision. And that decision would be based on, is the employee still refusing to return to work? There's no health issue for the employee themselves. They don't qualify for any of the reasons of the leave. And then at that point, I think you're at where you can make a decision. Do we terminate the employee, put them on layoff? But at that point, I'd also probably be suggesting you have a conversation with employment counsel just to make sure you've dotted your I's and crossed your T's. But I document all the steps along the way.
Thanks, Susan. Another question: is it necessary to send a return to work letter, or can I just send out a general message?
That's been an interesting question. I would say generally the return to work notice should be where the employee will receive it. So if you have an email and you know that you can do a return receipt, I know the unemployment office has actually indicated to some clients to send certified letters. The whole point here is you don't want any indication that the employee did not receive it or wasn't aware of it. And then depending on the types of roles you have and if the schedules are different, you might have to make it more specific to the employee versus a general notice. You don't want any employee to misinterpret that they never received it, right? That's where you have a responsibility to address it to the employee. And again, even unemployment saying certified letter, which surprised me, to be honest, but.
Better safe than sorry.
Yep.
Tom, there's a question that came in regarding PPP. So if a company has significant cash reserves, and this is I think a question that we've seen a couple times before, can the company show need for PPP? So this kind of goes back to our discussion that we've had numerous times about, do I have to exhaust all other forms of cash reserves in order to go for PPP?
Yeah. No, the answer is no. You don't have to exhaust those. So to answer their question, can they have cash reserves and still show a need? You know, absolutely, because you know if your business was impacted and you would have normally laid off employees as part of your business, you know, general operations, then and there was a negative impact on your business, then yeah, there was no equity or cash balance type requirement for the program. I think the intent was that if your business was impacted and you would have potentially, you know, made adjustments to hours or wages or pay rates, because that's what prudent business people do. You know, this was an effort through this program to try to prop some of those decisions up so that you didn't do some of those things. So yeah, they're not going to come in and look at what your cash or balance or your equity balance was at a period of time. They are going to look to see how was your business impacted and what did it mean, you know, to your potentially to your employees. So I think if you know, especially if you were under the stay-at-home order and your business shut down, you know, there's nothing that said, hey, if you had $10 million of cash, you're not eligible. That wasn't part of the eligibility requirement. The eligibility requirement was that you said that you were down, and it did you know, it did affect your ability to you know, to operate. So you know, we expect a lot of guidance in the next probably 7 to 14 days. We're hoping, you know, on this, but you know, there's no specific thing in the bill that eliminates you because you had a significant cash reserve. Because the other thing is, you know, what if, let's say you would have burned through half of your cash reserve, and then the business doesn't come back and you need more liquidity, right? So
Now what?
it's hard to predict. It's hard to predict that. Hey, what's the, you know, what amount would have made you ineligible? I had $1 million, but maybe after the 8 weeks I'd have dropped down to $500,000. Seems adequate, but then what if we had another bad 2 or 3 months and you used up the rest of it? So
Yeah.
I think you know, as long as you can feel comfortable that you can demonstrate that you were impacted and you would have maybe done something differently with your employees without it, then I think you're fine.
Yeah, I think as we start to see some return to, you know, I'll call it normalcy, although I don't know that that is the right term, but as some businesses start to reopen, seems like there's a natural tendency to kind of be looking at it and go, well, maybe I didn't really need that PPP. I've brought all my employees back this week, and you know, we're starting to ramp up. But you know, you mentioned it before. It's what was going on when you applied for that loan, and there was a whole lot of uncertainty at that point in time.
Right.
It looks like another PPP question. The PPP forgivable amounts include covered utilities. Can Raymond help me locate the definition from the Act of what is defined as covered utilities?
Well, you know, it's one of the areas we're looking for further guidance, because they have terms in there, you know, like transportation and a couple other things that have led to a lot of different questions. So I suspect that'll be one of the first guidance questions that'll give us a more exact listing of utilities. I mean, at the minute, you know, we think about things like, you know, obviously the essential stuff like gas and electric and water. But then, you know, there's a whole other list of things that could be interpreted as utilities that we're kind of waiting on further guidance. And so I would say we'll have a better idea here in the next couple weeks. But I don't think there's an extensive list that I think answers everyone's questions at this point.
Waiting for more guidance. All right, I got time for one more question here. If we don't happen to get to your question, we will certainly follow back up with you afterwards for sure and get you an answer. Under utilities, so this is another PPP, so this is for you, Tom. Under utilities, what is the transportation reference for?
Yeah, that's probably the number one question that we get, because it's just not clearly defined as far as if it's only limited to delivery of certain utilities, if it's related to, you know, other broad-based, you know, transportation type activities. It, you know, it doesn't really say, and there's nothing other than that word at the minute as far as guidance from the SBA and what that word means.
Sure. Yeah. Is that fuel costs? Is that, yeah, it could be a number of different things. Well, I want to sincerely thank both of you for the guidance and the advice that you have given our listeners, and I want to thank everyone that took an hour out of their day. I know there's a lot of information out there that's coming at us on a fast and furious basis. So, you know, thank you again for taking the time to attend our webinar. And I do want to remind everyone that after Susan makes one or two small edits to her PowerPoint, today's webinar will be out at raymond.com/industries/construction, and that is our construction practice webpage, where you'll find other insightful advice, podcasts, and links to a lot of other COVID-19 information that should be a good reference for your business. So, and if there's anything else that we can do to help, please reach out. We certainly are fielding lots of questions and helping our business clients with lots of issues right now surrounding COVID-19. So we'd be happy to help in any way that we can. So thank you, and enjoy the rest of your day.
Thank you. Bye.